This video is for the guy who sent me and my team a DM asking Jamil, I have dollars. How do I get started? What would you invest? How would you advise me? If you've ever felt like that, then this video is going to speak directly to you because I'm not only going to break down how I would invest $10,000 if I was a brand new beginning investor, I'm also going to tell you how I would invest $10,000 today, even though I have over $2.5 million invested into the stock market, millions of dollars of real estate, thousands of dollars out in loans and in notes right now. And so I'll explain how I would invest $10,000 today with being a more seasoned investor. I will explain how I would use that $10,000 if A, I had a business, which I do, and two, if I was going to invest that $10,000 into just as a personal investor. So if you guys are new here, my name is Jamil Frazier. I'm the founder of Think Life is Different. Um, I have built businesses and credited investor, and I really make these videos to speak not only to the people that we really serve, who tend to be business owners and high income earners, but for those everyday people that ask the same questions that I ask no more than 12, 13 years ago. And so when I really got started on my journey, I went from really negative $100,000 in debt to a millionaire in 5.5 years. So today in this video, I'm going to tell you exactly how I would invest $10,000 back when I had nothing, almost if somebody just gave me a gift and they were like, "Here you go, bro. Like now you got $10,000." And I'm sitting there not knowing anything that I know today. I'm really going to start from that premise. So this is really going to help you. Before we dive in, make sure to drop your comments and drop in the comments. What are the big questions that you have? What are the what are the things that really trip you up? The gentleman that messaged me that question, he's already in his 40s. He's got a graduate degree. He is married, no kids, but he's never really invested before. And the question that he sent, I'm actually going to read the very question that he sent in, and it says, "I have a fundamental question. Should my wife and I have an investment account together or separate? I know our children should when we have them. If you had $10,000 to start with, where would you put your money today?" So he's asking not from where you are right now, Jamil, not from the guy that's built, businesses that's done eight figures, not from the guy that has, 2.5 million already in stock market, but where would you start if you were me? And he says, would you start in the S&P? Would you start in silver? Would you start just buying Microsoft? What would you do? So let's break down what I would do. First, I'm going to start from the premise of me 10 years ago when I was basically 34 years old. Now I'm 44. Hopefully, you guys agree that I still look somewhat good. But when I was 34 years old, I was negative $100,000 in debt. I had no investments at all. In fact, I was renting this tiny little apartment, just me and my wife, and by that time, my 3-year-old son. I had no real estate. I had no 401ks. I had no Roths. I had no nothing. I just was working hard. What's so interesting about that time, though, is I was making about $112,000 a year of income, and I didn't own anything. So let me go back to there. So let's just say I got $10,000 today. What I would do, and if you see me looking down, it's because I took a whole bunch of notes for you guys. I want you to walk away from this time that we have together, really just saying like, "Dang man, that brought me a tremendous amount of value, and I'm so glad that I tuned in." So let's just say I had $10,000. What would I do with it? One of the first things that I would do is I would make sure that I had at least 3 months savings in a high yield savings bank. So when I say 3 months savings, you might be thinking like, what does that mean? Well, You want to calculate how much you spend and you want to calculate what are your expenses on a monthly basis. What does that mean? Well, that means if you add up how much you spend every single month on eating out, on groceries, on rent, on your mortgage, on utilities, on your car note, on gas, on all of these things, on your gym membership, on all of these things, when you add all those things up, what does that number come out to? Let's just say that that number comes out to $3,000 a month, or that number might come out to $10,000 a month. But back then, my expenses were probably like $5,000 a month. So I want to make sure that I have at least 3 months of expenses stashed away in a savings account where I can grow a little bit of interest. Why? Because I want to make sure that if anything happens in life, that I can fall back on the savings, that I can have a rainy day fund, that I can have an emergency fund. And let me tell you something about life is there is going to be a moment where there's a huge emergency. Think about just not that long ago, COVID happened, and when COVID happened, within the first couple months, there was like 60% of people. I mean, and I don't even know if that's a real number, but there was a large number of people that got laid off from jobs or that lost their businesses. When those things happen, and they are going to happen, but when those things happen, we want to make sure that we have something to fall on. So I would use that $10,000 and I would make sure to fund that savings account in a high yield savings bank. What does that mean? Back when I had nothing, I had no idea what a high yield savings bank was. I banked at every normal bank that everybody else does, right? Like Chase, Wells Fargo, Bank of America, so on and so forth. Farmers. That's not what I would do now. Now I would take that $10,000, I would find a bank that could give me 3% return on my $10,000, 4% on my 10,000, 5% on my 10,000. Why? Because if I just have this 10,000 sitting into a regular bank, they don't honor you, they don't bless you, they don't they don't they don't invest back into you by giving you interest on your money. Just think about it. If I gave $10,000 to somebody and they started using my $10,000 to make more money, shouldn't they pay me something for that? Right? Because that's exactly what's happening when you give your $10,000 and you just have it sitting in a regular checking account or savings account. Especially if you have it sitting in a regular savings account, what you're doing is you're giving that $10,000 to that bank. And what they're doing is they're taking your $10,000 and they're going to loan it out to somebody else. And when they loan out your $10,000, they're going to loan it out at 8%, 10%, 15%, 20%. So every month they might be making $2,000 off of your 10,000 and they don't give you anything off of it. It doesn't make sense. But back then I didn't know that. I didn't know that that's what banks do with my money. Now if I'm going to give my money to anybody and they're going to make money off of my money, then I want to make some money off of my money. So that's why we don't sit our money into a high yield savings bank. What we do, or sit our money into a regular bank, what we do is we go find a bank that's now going to pay you 3%, 4%, or 5% to have your money in their bank. That's what we want. So what happens is this $10,000, instead of it just sitting there at 10,000, it's now going to be 10,000 and X amount. And so it's going to grow steadily over time. And that $10,000 is going to make you money while it's sitting in that account. Does that make sense? So while you're listening to this, what you need to understand is a dollar is never a dollar. We need every single dollar that you have needs to be making you money. And if that dollar is doesn't have a job and it's not making you money, then it's because we don't understand how money works. Money needs to be like a worker for you. It needs to be like like an employee of a business, right? I have 4 kids. So my kids have chores. They have a job. So that money needs to have a job, and that job needs to be bringing you more assets, okay, more liquidity, more money. So that's the first thing I would do with that. But let's set that aside. Let's say that I already had, you know, fully funded my emergency fund with 3 months of my expenses, and I've already done that. And now I have $10,000 because what he's asking me is he's not asking me, he wants the sexy stuff. He's not saying like, oh, well, I should put this money away in savings. He doesn't want to hear that, even though that's what he should do. But what he's really asking me is like, where would you invest this money? So let's assume that I already had that my $15,000 stashed away in a high yield savings account. What would I have done? What would Jamil 10 years ago would have done? Well, I would have taken $1,000 out of that 10,000 and I would have started a side hustle. One of the best things you can do, and I'm going to show you in a second, but one of the best things that you can do, there's pretty much no other way that I know of where you can get a better return on money than starting a business. Okay. So, what I'm going to share with you in a second is just going to be an extension of what I'm about to say now, just at a much higher level. And I'm going to walk you through the numbers. And you're going to see why taking money to start a business makes so much sense. But if I'm giving myself advice 10 years ago, out of that $10,000, I'm definitely taking 1,000 and I'm starting a side business. And you guys, I don't even care what that side business is, but this $1,000 has got to make me 2,000 and then 3,000, then 4,000 and then 5,000 and then 10,000. Because if I could take $1,000 and make $10,000, now I've just 10x my money, just like that. And to tell you the truth, you can take $1,000 and make $10,000 in a month. So you can 10x that money easily, 100x that money easily in 30 days or 60 days or 90 days. I took 12 years ago, excuse me, 13 years ago, 14 years ago. That's exactly what I did. Is I took 200 bucks and I opted into a direct sales organization. And with the $200 that I took to start my business, that $200 went on to make the business 9 figures in revenue. And not only did it make that business 9 figures in revenue, it made me probably $8 million off of a $200 investment. So I'm definitely taking $1,000 and I'm finding something that I can do part-time at the beginning, and eventually I'm gonna make that part-time full-time. So whether that's a direct sales organization, whether I'm selling avocados, whether I'm freaking painting curbs, signs on curbs, whether I am doing a car wash detailed business, whether I'm painting houses, whether I'm cutting grass, I'm doing something on the side that I can start a business, whether I'm doing drop shipping, whether I'm doing content creating, whether I start a video editing company, I'm doing something. I am taking this $1,000 and I'm going to turn this $1,000 into 10,000, 20,000, 30,000, 40,000. And all it's going to take me is $1,000. With that $1,000, I can easily go and utilize ChatGPT. I can set up my website. I can set up a payment system. I can set up my marketing. I can buy the beginning materials that I need. Like if I was going to start a painting company, I could buy the materials. I can start the partnerships. I could do all of that with $1,000. And I'm about to turn this $1,000 easily. That first month, I guarantee you, I'm going to make at least $1,000 in sales. I don't even care what it is. It could be this coffee cup. I can take that $1,000, go out and buy me 100 of these. Okay. And I buy 100 of those. And let's just say I'm selling those right there for $25. So I take 100 of those times $25. That's that's $2,500 that I'm going to make in sales off of $1,000 investment. You see what I'm saying? So now I've already taken that $1,000 and I've made 2,500. And what I guarantee you, I would have all those things sold in 1 month. I promise you. Right? So I'm about to flip that $1,000 into $2,500 in 1 month. Now, let's just say I do that for the next year. So I take that 25 times 12, and now I've made $30,000 off of $1,000 investment. So I'm definitely taking $1,000 and I'm starting me a little side hustle. My first year when I invested 200 bucks to start my little side business, I was still working full time in medical sales. In medical sales, I was making $112,000 a year. I had a $72,000 base salary plus my commissions and bonuses. I was at 112,000, still broke, $100,000 in debt. Why? Because every time my income went up, I raised my lifestyle. Every time my income went up with my job, I moved to a little bit bigger apartment. I got a little bit better car. I started eating out a little bit more. And my wardrobe started to expand. I went on more trips. Every single time my income increased, I was so not smart and I would increase my lifestyle. And because my lifestyle would move up in the same ratio as my income, I never had what I needed to actually invest. And even if I did, I just wasn't smart enough to actually invest, right? Like I just didn't do it. So, anyways, I would take $1,000 and I would invest that into a part time business. And then once that business got up where I'm starting to do $30,000 in sales, what I'm going to do is I'm going to take a step back and I'm going to hire a sales rep so that they can start doing the sales and I'm going to start training them. It's still part time, by the way. And I'm going to start training them on how to do what I just did. All I'm going to do is transfer my skills and help them. Now they're going to be getting the bulk of the money, but that's okay because once I get them up and running and maybe they can do a part or full time, and so I pay them what they're worth, and then the excess I keep, even though I haven't been doing much of anything. This is how you start to scale a business. I wish I would have known that back then, but I didn't. All right, so I got $9,000 left. What do I do with it? Well, the next thing I'm going to do is I'm going to max out my Roth IRA. What is a Roth? A Roth IRA is basically an account that is established that you can invest in, and you want to invest in that because when it's time to draw that money out, that money is going to be tax free. Now, the only drawback with a Roth is that there's limitations on it, meaning this year you can only invest about $7,500 into a Roth. So they have limitations based off of your age. But that's the next thing that I'm absolutely going to do because if I could start stacking money into a Roth IRA, then by the time, let's assume I'm 32, by the time I'm 62, that's 30 years, and I can fund this thing, I can max this thing out at like $7,000 a year. By the time, if I do that over the course of 30 years, I'm gonna show you exactly what it is, okay? So if you guys don't already have this app right here, it's called the Compound Interest Calculator. I don't know if you could see it. I don't think you could see it, but you can go download the Compound Interest Calculator, and all we're gonna do is take $7,500, and we're gonna assume we're gonna get about a 10% return. We're gonna do this every single year for the next 30 years, okay? And let's see what we get. So at the end of 30 years, we're going to have $1.3 million dollars that's tax free. So just imagine when you're 62, because you've been steadily putting money into the thing called a Roth. And when you're 62, you just go to this account and you liquidate if you want to. You can liquidate all $1.3 million of that, and it's tax free. You don't have to pay any of it at all to Uncle Sam. Now, watch this. What if you're 62 and you're like, bro, I don't need that? And you just let it grow for another 10 years? Watch what happens. So we're at 1.3 million now, right? Watch what happens. So if you just let that grow for another 3 years or 10 years, you're going to be at $3.6 million of tax free money. So that's why I would invest into a Roth. Now, the tricky thing about a Roth is when you open up a Roth, you're basically just opening up a savings account. And if you just leave that $7,500 into that savings account, it's not going to do anything. It's going to grow just as if you put that into a high yield savings. You're not actually investing in anything. You actually just put that money into what they call a money market. This is the biggest mistake that people make when they invest into a Roth. They open up a Roth and they say, "Oh my gosh, I got my Roth. I'm good. Like I'm investing." Nope. All you did was opened up a money market account. Not until you actually pick the stock that you want to trade that $7,500 in, you're not invested. So what would I actually invest in inside my Roth is I'm definitely going to invest into this ETF, and I'm investing into two ETFs, and I'll tell you why. The first ETF that I'm investing in is an ETF called VOO, VOO, and that's Vanguard's S&P 500 ETF. And what it does is it now gives you broad access to invest in the top 500 big companies in the United States. These are all companies that you and I know. This is going to be your Apple, your Amazon, your Microsoft, your Tesla, your Nvidia, your Google, your Facebook. These are Meta. These are all these really big companies that you and I both know and that we use every single day. Now, why would I invest in that? Because when you take that 7,500 bucks and you invest into this ETF, it is the $7,500 is going to be allocated across 500 companies. So now it allows you to become an owner of 500 companies instead of just one company. Now, let me ask you, how dope would it be if right now you can go from owning nothing to by the end of tonight, you own 500 companies? How dope would that be? So the other reason why I would invest in that is because historically, this ETF that tracks the S&P 500 is going to return somewhere between 9 and 12% on that money. So just think about this $7,500 growing every year on average somewhere between 9 to 12%. This means your money is now going to start making money. And just like I showed you with the Roth, that same thing, or excuse me, just like I showed you, that compounding is going to happen over time. Okay. So part of the 7,500, 4,500 of that 7,500, I'm going to invest in VOO, Vanguard's S&P 500. Now, $3,000, the $3,000 that's left, I'm going to invest in a different ETF, which is called QQQ. Why would I invest in QQQ? Because QQQ is an ETF that allows me now to invest in some of the hottest, coolest, most lucrative technology companies in the United States and in different parts of the world. And if you understand where we're at in 2026 at the time that I make this video, Technology and AI is really the wave of the future. And QQQ long term has outperformed even what I just invested in, which was the S&P 500. And so long term QQQ, with me being a young dude, right? This 10 years ago, 34 years old. By the way, even if it was now, I'm still going to invest in QQQ. Okay. So, but definitely 10 years ago. Okay. If I would have known, but I didn't know, but now I know. So now, long term, having a long term horizon, this portfolio, this Roth, is likely going to return my money somewhere at 15, 20, 25%. So this basically this 7,500 bucks is likely, right? You can't make any promises, but if I just go off of what has been happening, then this thing is going to return probably 20% of my money. So just think you got 7,500 bucks sitting in this account and it's making you 20% on that money. What we're used to paying 20% to other people. Now we're going to be the ones making 20% on our money. Okay. So now I got a few dollars that's left over. I've already invested $1,000 to start me a little side hustle. I've invested $7,500 into maxing out my Roth IRA. So basically, I have what, 1,500 bucks left over, and I'm going to invest that last $1,500 into my brokerage account. What is a brokerage account? A brokerage account is an account that basically allows you to invest in stocks. Okay. Now, your brokerage account is a little bit different from your Roth. Now, believe it or not, your Roth is still a brokerage account. It's just a specialized brokerage account that allows you to invest in it, but you have those limitations that I talked about. And you can only invest a certain amount in a year, and you can't take that money out of a Roth until you're like 59 and a half years old. You can take that money out in a Roth, but you'll be penalized for it. Okay. In your brokerage account, you can invest in anything that you want as much as you want. You can sell as much as you want. You can liquidate your money as much as you want. You can borrow against your brokerage account. You can invest in real estate in your brokerage account. You can invest in some markets, you can invest in crypto in your brokerage account. You basically have a ton of flexibility. So this last $1,500 that I have, I'm going to do the exact same thing that I just did in my Roth. This $1,500 is going to get split between two ETFs, the same ones that I just invested in. That's why I told you keep it simple, smarty pants, right? Or they say keep it simple, stupid. Keep it super simple. Keep this shit simple. Keep it simple, because what I just invested in is going to outperform 90% of fund managers. Okay. That means that people every single year give their money to advisors so that these advisors can manage their money actively. What I just invested in is going to outperform what these really smart people are supposed to be doing. Okay. So this last 1,500, I'm taking half of it. I'm investing in VOO again, VOO. And the other half, you're right, I'm investing in QQQ. Go on and drop it in the comments. Does that seem simple? That's what I'm doing with that $10,000. Does that seem simple? Just drop simple in the comments right now. I want you all to stop on this video. And I want you, if you got on this video thinking, how would I invest $10,000? If what I just explained was simple, I want you to put simple in the comments. $1,000 of it, I'm starting a side business. Well, Jamil, I'm not a business person. Turn yourself into one. Okay. Then I'm investing into my Roth. I'm maxing that out. And then I'm investing into my brokerage account. That's it. Assuming I don't already have the savings. So great. So that's what I would do at 34 years old. If I go back to where my friend is at right now, even though he's in his 40s, he wants to know if I had $10,000 from where he's at, A new investor never really invested. What would I do with it? So hopefully I just explained it. But what would I do now? What would I do now as a guy that has I probably what do I have invested into the stock market? Maybe like $2.7 million invested into the stock market. I have a couple $1,000,000 in real estate. I have hundreds and thousands of dollars out in loans right now. I mean, we have structured notes, all sorts of stuff. What would I do with $10,000 now? You might think that, oh, he's probably not excited about $10,000, seeing as if he's got all those other investments. Let me stop you right there. I'm just as excited about $10,000 today. I'm actually more excited about what to do with $10,000 today than I would be even back then. And I'm going to explain why. So, I'm going to break down how I would invest $10,000 first in my business and then how I would invest $10,000 for my personal. Okay. At any point in time, drop your question in the chat and I'll get back to you. I'll address it. Okay. That's why we do these lives because I want to make sure that I can be here for you and that you guys get your questions answers too. It's not just about answering our friend's question here, but I want to make sure to answer your question as well. So go on and drop your comment right here in the chat, and any question that you have, I will answer it. So let's break this thing down. So I got $10,000. What am I going to do with it today from my business standpoint? Well, I'm right away, like tonight, going to invest $7,000 into running an ad campaign for my business. Now, when you're watching TV or when you're on YouTube or when you're on Netflix and you don't like invest in a higher package, like you guys are used to seeing ads all day long, right? And sometimes we get tired of the ads, and so we pay more so we don't have to see them. Ads are one of the best ways that you can let the public know that you exist. One of the problems with a lot of businesses is nobody knows that that business even exists. So, one way to counteract that is to run ads. Well, if I invest $7,000 to run ads for my business, which is very simple, by the way, right? 'Cause my business is in the financial coaching and consulting world now. And what we offer our clients is financial coaching and consulting. But maybe nobody knows about Jamil Frazier and Think Life is Different in our company. Maybe nobody knows about your company, but we can get them to know how. I can sit right here on my desk and I could film an ad and I could say, are you a high earner? Are you a business owner? Do you realize and does it bother you that you make so much money and yet your money never makes money for you? Have you ever considered why that happens? It's not because you're a bad person. It's because you don't know how money works, right? I could just sit here and do an ad. And then what I'm going to do is I'm going to pay $7,000 to start running those ads. Now, here are the numbers. For my $7,000, I am going to get about 1,000 leads. About 1,000 people are going to see that ad and they're going to click on that ad so to show interest into what that ad just said. Okay. Now, not all those 1,000 people are actually going to come to my web class. So I hold an online event. So my ads bring people to my online event where from one night I teach you guys the game. Okay. So even though 1,000 people clicked on an ad and they showed interest and they said they're going to go to the event, they're not going to come to the event. Only about 200 people are going to come to the event. Now, at the event, only out of those 200 people, only about 80 of those people are going to book a call to learn more about what it is that we do, how we can help them with their money, with their investing, and with their business. Okay, so that 80 people are actually going to book a call with us, but not all 80 of those people are going to get on a call. Okay, Only a handful of those 80 are going to get on the call. And then when we do get on a call, only about 20% of those people are going to decide to do business with us. So out of those $7,000 that I pay for ads, I got 100 leads and I'm only going to make about 16 sales. Okay, but watch this. Those 16 sales are going to bring in, excuse me, $192,000 of revenue. Did you hear me? I spent $7,000 to run ads. We're going to make 16 sales, and those 16 sales are going to bring in damn near $200,000. Isn't that amazing? Remember, I told you a few minutes ago, there's no better investment for any money than to start a business. Okay. So out of that $192,000 of revenue minus the $7,000 that we spent on running the ads, now my business has just made $185,000. Wow. Wow. So I took $7,000 of ads and I just made $185,000. And this all happened in 1 week. Isn't that amazing? So that is a 27x return on ad spend. And you guys, there's no better return. There's no way I could take $7,000 and put it into a piece of real estate, put it into a stock, lend that $7,000 to a business. There's no other investment that's out there that I can take $7,000 and within a week turn it into $185,000. This is why running a business speeds up time considerably. Okay. This is why I went from being $100,000 in debt to a millionaire in 5.5 years because I invested and started a business and I learned the skills to grow that business. Imagine if I would have stayed in medical sales in that same amount of time. I never would have produced ever. I could have lived 3 lifetimes, and I never would have produced in those 3 lifetimes working in medical sales what I was able to produce in a 10-year time period in that business ever because of how fast you can utilize leverage. Does that make sense? If you have questions about that, let me know in the chat right here. So I'm going to take 7,000 of that 10, I'm going to invest it into running ads for my business. So what am I going to do with the other money? Well, the $3,000 that I have left over, I'm going to use that to hire a sales rep. A sales rep? Yes, a sales rep. I would say outside of the CEO in the business, there's probably not another person in the business that's more important in terms of value than a really good salesperson. Okay, like if you a really good salesperson is like having Michael Jordan on your team or Kobe Bryant or LeBron James. It is a cheat code. And if you have 10 of those people, it's really a cheat code. And if you have 20 of them, it's definitely a cheat code. And if you have hundreds of them, you are unstoppable. But you know what's kind of cool? Sometimes you only need one. You just need one really good salesperson. So check this out. I'm gonna invest $3,000 to hire a new sales rep. I don't even I really don't even want the sales rep to do much of anything. I only want them to sell 4 sales for the whole month. Just 4 for the whole month. I want to invest $3,000 to get this person in the door, give them a solid little base salary, and I only want them to sell 4 sales that whole month. Well, check this out. Those 4 sales are going to result to like $60,000. Okay? And that's on the low side. So $60,000, they're going to get about $6,000 worth of commissions off of those $60,000. They got a $3,000 base salary. So they made $9,000 for that month, but they produced 60,000. So they made 9, but the company made $51,000, y'all. So I invested $3,000 so that the company can make 51,000. Again, where can you get that type of return? Where can you put $3,000 and 30 days later get $51,000 back? You tell me. I don't know too many places. Okay. So I'm definitely going to invest in a good salesperson. Now, here's the deal. My $10,000 that I invested has now turned into $240,000. Wow. Remember, I told you, I said, I'm more excited about $10,000 now than I am 10 years ago. Why? Because I can take that $10,000 and in my business turn it into 240,000 in 1 month. Not a whole year. 1 month. Isn't that amazing? 1 month. So, that's a 416% return on my money. You remember when I was talking about earlier, I was like, "Oh, if you take this 10,000 and you invest it into, the S&P 500, you're gonna get like a 9 to 12% return." Remember I said that? And I was excited about that. I'm still excited about it. I'll take a 10% return every day of the week. But now with your business, a $10,000, you could actually have a 400% return. 400% return? I'm excited about a 10% return. And now I can get a 400% return? That's crazy. That's why businesses, especially if you know how to build them and scale them, will always outpace for the owner, way outpace, even where I live right now. Even where I live right now. I live, listen, all the houses around here are at least 2.5 million, right? 2.5 million all the way up. Okay. All of my neighbors are super, super, super bright, super smart. The big difference is most of them work for somebody else. Now, there's nothing wrong with working for anybody else. You'll never hear me say that because I value employees so much. I would not be where I'm at without having some kick-ass employees who I value. They're some of my favorite people in the world. So we need really, really awesome employees. The only thing I'm explaining right now is the difference between how you can scale so fast. Okay. So my neighbors are doctors and engineers and attorneys and all that stuff. I'm some random black dude sitting in my home office right now creating YouTube content for you, right? Like, look at me. I'm not a doctor. I'm not an engineer. I'm not an attorney. I don't have advanced degrees. I have none of that stuff, but I have a skill set. And that skill set that I learned was how to scale organizations and how to scale businesses. Okay. It just so happens that that skill set can and will make you millions. Wow, if I was an engineer, I would make maybe like $200,000 a year instead of $200,000 a month. Do you see the difference? Because when you have a business, I just showed you, you can scale a lot faster than just trading time for money. Okay. That's if you want to get ahead really, really, really fast, then you want to learn this whole business thing. How can I do that? How can I take $10,000, invest it into a business, and then make 240,000 in 1 month, not a whole year? So that's what I would do on the business side. What would I do on the personal side? The personal side is so easy. It's just steps. Personal side is not, it doesn't have to be sexy. A lot of times it's not sexy. People want it to be sexy, But then when you get super sexy, you can also get in big time trouble. Why? Because you're taking on more risk. Okay, you can build tremendous wealth in your personal wealth by being super boring, bro. Super boring. So, what are the steps? If I had $10,000 and I was going to invest that on my personal side today, what are the steps? Well, the steps are always the same. Do I have at least 3 months of expenses set off to the side in a high yield savings account? If I don't, then I need to do that. Let's assume I already have that, which I do. Step number two is, have I maxed out my deferred compensation plans? What does that mean? If I have a 401k that maybe my job is contributing a match to, have I contributed to that? Do I have a 403b? Do I have a compensation plan either through my own business or through my employer to where I can put in money right now, defer the taxes on it, build up some equity over time, and then when I decide to take that money out, then I get hit at a tax bracket at that time. I defer that compensation. So I'm going to make sure that if I haven't already contributed to that, then I'm going to take this $10,000 and I'm going to take pretty much all of it, and I'm going to invest it into those deferred compensation plans. Let's assume I've already done that. What's the next step? Now I go to my Roth IRA. Why? Because I can have this money grow tax free over time. Okay. So let's assume I've already done that. I've already maxed out the Roth. I've already done that. What's the next step? Well, the next step is I go to my brokerage account. In my brokerage account, I'm going to max out and try to put as much into some very simple ETFs like I talked about before. Vanguard's S&P 500, QQQ. Okay? Let's assume I've already done that. Jamil, we've already heard that. What would you do? You've already done that. What would you do next? Then I'm going to take that $10,000 and I'm going to lend it. That's probably like you guys want to hear the sexy stuff. That's gonna be my next step. That's exactly what I would do because that's exactly what I do. I'm gonna take this $10,000 and I'm gonna find people that need this $10,000 more than I do, most likely gonna be businesses, and I'm gonna lend this $10,000 to them for a certain percentage. And I'm going to let them hold this $10,000 for about 6 months. And I'm going to want them to pay me every single month a percentage that we've agreed upon. And then when the 6 months is up, I want them to give me my $10,000 back so that I could do the same process to somebody else. Okay. So I'm going to do that. I'm going to find businesses. I appreciate you. I'm gonna find somebody said great content. I appreciate you. I'm gonna find great businesses that need my $10,000. I'm gonna lend it to them. I'm gonna tell them how much I want in return for allowing them to hold my $10,000. I'm gonna tell them I want my $10,000 back in 6 months, but every month I want them to give me a percentage of that. Let's just call it 10%. So every month I want them to give me $1,000 just from borrowing my 10,000. So over that 6-month time period, they're going to pay me $1,000 a month. That's going to be $6,000. At the end of the 6 months, they now give me my $10,000 back. So now my $10,000 has just turned into how much? $16,000. So I just made $6,000 for doing what? Nothing at all, but just lending this money. Well, Jamil, I don't feel confident with lending it to other people or lending it to businesses. What if they don't pay me back? That's fine. How realistic is that as a return? Very realistic, extremely realistic, extremely realistic. But let's just say we don't feel confident with that. You're like, I don't know. I've dealt with business owners before. I dealt with people, they don't pay me back. Fine, no big deal. Then I'm going to take this same $10,000 and now instead of lending it to a business or to a person, I'm probably never going to lend it to a person, by the way. I'm always going to find a business that needs it. and I'm gonna actually try to take ownership in that business too. So I wanna lend them the $10,000, but I want them to give me a piece of the business, but that's too much for what we're doing right now. So if I don't feel comfortable with them, all I'm gonna do is now find banks that want to borrow my $10,000. And this is what we call a note, a structured note, where you lend money to banks. They borrow your money for a certain amount of time. They're going to give you a certain amount of interest for you lending them the money. And part of this money is also going to be invested into the stock market. Okay. So we call it structured notes for a damn, I'm giving you guys some good stuff. You guys, I've made so much cash with lending money to banks. It's not even funny. I don't know how they don't teach us this stuff in school, to be honest with you, but I've made so much money. I have a lot of money lent to banks right now. What type of banks? Goldman Sachs, Citigroup, Bank of America, you name them, they will take your money and they will give you. You can structure this loan any way you choose. To be honest with you, and you can do it for a year, 3 years, 5 years, and you can have the upside of the stock market, but then you can have a buffer. So if the stock market goes down too much, it buffers and you can't go below that. And on top of that, you also have a certain percentage that the bank is going to issue you for you letting them borrow your money. What is that percentage? Could be 8%, could be 10%, could be much more than that. So that's what I would do with the 10,000. First, I'm always looking at my savings. Do I have at least 3 months put away in case shit hits the fan? And shit's going to hit the fan at some point in time. Okay? So I got 3 months set aside in a high yield savings account. There's so many of those that are out there now. Okay, so you can just Google. I have another video of the best high yield savings account. You can go on my Instagram and just go on any of my Instagram reels or whatever and just type in HYSA, and automatically then the team is going to send you a document that has like the top 10 to 20 best high yield savings accounts. So that's step number one. Do I have my rainy day fund in place? If yes, awesome. Next, I go to deferred compensation, especially if my company is matching what I am contributing. If they're matching, I'm taking it. It's free money. If I have my own company, then I am investing into my own deferred compensation plan. And I'm going to make sure that my company is going to match what I'm putting in. So when you run your own company, you are the employee of the company, and the company, who's also you, can match you as the employee. So we always max out our deferred compensation plans. Next, my Roth IRA, I'm making sure to invest in 2 ETFs that I like. Okay. And we've gone over there. And if I've already done that, then I'm going to my brokerage account. If I'm already contribute to my brokerage account, then I'm going to lend the money. Well, you say, I don't want to lend the money. That's fine. You don't have to. You still have real estate that you can invest in. You still have REITs. You could do wholesaling. You could go flip houses. You could do all sorts of stuff, right? All sorts of stuff. My friend says, "Will a bank receive some as small as 10,000?" Absolutely. I have a $10,000 note out right now, I believe, to Citibank. I thought they only borrow a large sum. No, they don't. Right? Some do. A lot of my other notes are 50,000, 75,000. But you can find banks that will take 10. I promise you, because I have it right now. I'm learning things. Yeah, of course. Great question. So I hope that that was helpful for you. My buddy who asked me that question, from our Facebook group. I hope that this brought you value. If any of you guys enjoy the content, consider subscribing to the channel. Give this video a thumbs up. It really helps with pushing these videos out. I've built $1 million businesses. I've never been on social media really like this. And so I'm really trying to show up and bring value to the to the YouTube platform. I've never done this before on YouTube, even though I've built, $1 million businesses before. And so this is new for me. But I really love delivering value this way. So consider subscribing, give the video a thumbs up, and feel free to share it. Until we see you the next time, let me know in the comments one of these strategies that you would take and start implementing it. Should somebody give you 10,000 or should you already have 10,000 to put to work? What are one or two things you're going to start doing or would do starting tonight? Let me know in the comments and we'll see you on the next one.